Hello and good morning, ladies and gentlemen. Here with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Outlook. Starting as usual with the North American markets. Yesterday, the Dow, 25 points up, a little bit of a recovery there. The Nasdaq showed 90 points up yesterday. The DIX is with literally no change. U.S. stocks rose for the first time in 3 sessions yesterday, recovering some of the brutal losses seen in the aftermath of the UK's vote to quit the European Union. Energy, financials, and technology sectors lead the gains, rising more than 2% yesterday. GDP index, 0.2% worse than the expectations at 0.4%. GDP analyzed 0.1% better than the expectations. Personal consumption expenditure prices quarter-on-quarter weaker than the expectations. Core personal consumption quarter-on-quarter again 0.1% weaker than the expectations. And S&P Case-Shiller Home Price Index is year-on-year as expected at 5.4. Consumer confidence 4.7 better than the expectations. This is until June 16, before the Brexit. Today, bank stress test info, personal spending, core personal consumption expenditure, price index month-on-month and year-on-year, personal consumption expenditure, price index month-on-month, year-on-year as well, and personal income, pending home sales as well, month-on-month and year-on-year reports from the US today. For the European markets, yesterday the DAX and the CAC 40 did about 100 pips up. Both indices are currently at major resistance level on daily and weekly charts. Euro dollar 60 points up, 100 range. Euro yen 160 up, almost 200 range. With the EU summit going on, traders have also been paying extra close attention to remarks from leaders and policymakers. Therefore, German Chancellor Angela Merkel has mentioned that she regrets the Brexit decision by the UK, but that there's no backing out now. She pointed out that the EU has managed to weather EU issues in the past, such as the Greek debt drama, for example, and that the region could be strong enough to withstand the Brexit. Eurogroup President, Mr. Jerome Dijsselbloem, added that the EU shouldn't take hostile approach in negotiating with the UK, but the European Commission head, Mr. Jean-Claude Juncker, reiterated that outgoing UK Prime Minister David Cameron should provide clarity. In a statement following the Brexit vote a few days ago, EU Commission President Jean-Claude Juncker did note that the UK will remain a member of the EU until the negotiations are over, and this can go beyond the 2-year time limit in case UK requests an extension. Meanwhile, the European Central Bank head, Mr. Draghi, wasn't around for actual summit, but comments crossing the news wires showed that he expects Eurozone growth to weaken due to slower UK growth and trade activity. The upcoming events for the day would be for the Swiss franc, the UBS consumption indicator, and then for the Eurozone, services sentiment reports, consumer confidence, economic sentiment indicator, as well as the industrial confidence reports. We also have tomorrow the French CPI data year on year, and preliminary reports. Also, we have the unemployment change and unemployment rate for the European zone, and CPI year-on-year and core preliminary reports. Moving to our favorite UK markets. Yesterday, the FTSE 100 gained 150 points, 151 to be more exact, closed at 6,143. The 10-year gilt yields fell from 1.50% on Friday last week to 0.90 levels, where it is currently. The sterling continued to extend its gains, adding another 1%, even a little bit more versus the dollar. The currency regained some of the lost ground, but in the light of political chaos in the UK, the move may very well be a temporary one. with chaos in both the Tory and the Labour camps and strong calls from the quick Brexit from the EU. The markets are extremely volatile and uncertain. Global bonds have doubled their liquidity requirements from the Bank of England. Consumer credit for today, mortgage approvals, GfK consumer confidence for the month of June. Also, we have GDP reports quarter-on-quarter and year-on-year, and market manufacturing PMI. We also have a few Tier 3 reports, which are the nationwide house price, net lending to individuals, money supply month-on-month and year-on-year, total business investment, which is going to be year-on-year and quarter-on-quarter, indexes of services, and the current account reports. Moving to the Asian markets, the Nikkei 225 did 450 points up yesterday. Retail trade month-on-month for the month of May, 0% as previous. Retail trade year-on-year for the month of May, 1% weaker than previous at 0.3%. And large retail sales are worse than previous at minus 2.2%. Biggest movers were versus the euro, 160 points versus the pound, 250 versus the Aussie, 110, 130 versus the Kiwi, 90 versus the dollar, and 93 versus the loonie. Industrial production year-on-year, month-on-month, preliminary data. Foreign bond investment and foreign investment in Japan stocks are due by the end of the day. On the commodities sector, the S&P 500 index had a range of 40 points, 42 points to be more precise, up to 2032 where it currently stands. API weekly crude stock. Yesterday, crude supplies fell by 3.9 million barrels for the week ended June 2nd. U.S. crude halted a 3-day losing skid on Tuesday amid an easing dollar as threats of an independent worker strike in Norway offset continuing fears of potential recession throughout the euro area in the wake of last week's historic Brexit referendum. Crude oil prices gained further in Asia during the night on Wednesday after industry estimates showed a drop in the U.S. crude stockpiles. WTI had almost $2 range, currently at 48.10. Today, EIA crude oil stocks change on Friday, Baker Hughes oil rig count reports. Gold prices fell in North American trade yesterday, declining for the first time in 3 sessions as investor sentiment began to improve in wake of last week's shock vote by the UK. The yellow metal had a range of $20 at $13.19 currently. Silver also had a range of 31 cents at $18 currently. Natural gas is trading at $2.85. At the moment, the range yesterday was 15 cents. That was pretty much all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.